But let's put focus then on the hospitality space. Royal Orchids Hotel is in focus. The company has opened 3 new hotels recently. These are in Chandigarh, Chennai as well as Kulu Manali. Now with this, the Regenta and Royal Orchid Hotels now operate in more than 50 hotels in India, and the management of course aims to operate in over 100 hotels by the year 2022. In fact, we have the management joining in right here in the studio. Chairman and Managing Director Chandar K. Balji as well as the Chief Financial Officer Amit Jaiswal joining in. Thanks very much and a pleasure to have you on here, and welcome of course to Business Television India. Balji, let me just start with you. It's been a fairly strong close to the year, and we've been having conversations about the way average room rates have actually moved up over the course of fiscal 19. On a standalone basis, you've seen a jump of about 28%. If you look at the consolidated number, it's about 10% jump that you've seen coming in on ARRs. Things are definitely looking much better than they were looking just a few years ago. And this really has been a strategy. We've been talking about it with you off and on. First, your focus was on occupancy and then the ARR, and it's played out to script so far. What really is the strategy going forward from here then?
See, the strategy going forward right now would be the asset light strategy which we have followed for the last 2 years. And I think that has paid off pretty well, because Royal Orchid Associated Hotels, which is 100% subsidiary of Royal Orchid, is the management company. So that has turned around, and normally it takes a little time for any management company to turn around, because on the basis of a strength of a parent company, this company we handheld, and it has really paid off. Now going forward, what happens is whatever new hotels we take up, the most of the fee that we earn from those hotels flow directly to the bottom line. There is very little increment in the overheads. So I think, if we are looking at growing from 50 hotels to 100 hotels over the next 2 years, so I think there will be a substantial growth in the bottom line, as well number of hotels which are coming up. So we are aggressively pursuing that strategy. Of course, I think, as I've mentioned, for the last 2 years, occupancies have gone up, and we are looking at ARRs going up already 10%. Over the next 2 years, the growth seems to be very good. If you see all the analyst reports which are coming into the market, and with the strong government coming up, the India story is going to be definitely very, very good. So I think another 10% increase per year for the ARRs, it is definitely not very difficult. And the moment you get that, most of it flows down to the bottom line, because overheads don't grow at that rate. So ARRs will flow into the bottom line. So I am seeing a very, very positive growth over the next at least 2 or 3 years.
Alright, so 10% ARR, you can expect to repeat that performance then as far as the next financial year is concerned. Amit, then let me ask you, you've kept a tight control on the cost side, and that's exactly what Mr. Balji was also mentioning, that you're seeing that occupancy as well as ARR flowing quite clearly down to your bottom line and also to your margins. It's been a very steady increase on the margin front, 15% in fiscal 16 all the way now. We find ourselves at 22% in fiscal 19. Each financial year you've been able to add. Is it sustainable at this level? Do you see further improvement in margins?
Absolutely. See, I would like to focus on the absolute numbers, that is the EBITDA. If you see FY17, we closed at an EBITDA margin of around 28 crores. Then we moved to 38 crores in 2018. Now 2019, my EBITDA margin is almost 49 crores. And this is the way forward, and I personally feel that next year we should be touching 60 plus crore of EBITDA margin, and then by FY21 we should be reaching somewhere around 75.
Alright, so that's 60 plus crore in EBITDA margin. That's quite an aggressive target that we're looking at going forward from here. But fiscal 20, Mr. Balji, there are some concerns. It's not exactly very sanguine business environment that we're looking at. We've seen the kind of liquidity crunch that has played out. We've also seen, of course, the entire election overhang, and generally at times like that, I'd imagine months of April would be a quiet period for your company. What should we anticipate? Are you seeing any constraints because there's less money in the hands of people?
No, I don't think so, because the people are traveling today. What's happened is, over the last couple of years, I've seen a huge movement in youngsters traveling on holidays at a short notice, and India definitely has a large number of youngsters, and a large number of holidays. In fact, the long weekends are something which have been a big boon to us, because our company was earlier focused only on the business travel. Now over the years we have a pan-India presence, so we have de-risked ourselves. We have a mix of leisure properties and business hotels. So you see the Goa hotel has performed very, very well over the last 2 years. And so I think, I don't visualize, these small glitches will always be there in any economy. 1 month not being good, 1 month some floods are coming, something or the other will happen. I think that's, but I think it's not going to be a very, very serious issue for us.
All right, where then are you seeing the contribution from? Let's break this up. Obviously, we have the various subsidiaries as well, and now we start to see our subsidiaries actually turn profitable, which is definitely good news. Your consolidated numbers are looking fairly good. If you break it up also between the contribution that we're seeing coming in from the room rates, which have definitely moved up, and also the entire F&B segment that has been a big focus area for you, where are you seeing the traction?
See, one thing you mentioned about F&B is that we, a couple of years back, moved a lot into wedding segments for our larger hotels. So, and we have had various good schemes, like you have a wedding in our hotel, honeymoon is free. So because we can offer honeymoons, somebody having a wedding in Goa and he's in Bangalore and he gets a honeymoon in Goa, so it's a great attraction for him. Somebody having a wedding in Jaipur hotel and you offer him Mussoorie as a honeymoon destination. So that strategy has paid off very well. We did a lot of work on wedding destinations. So F&B on the wedding and banquet fronts is a focus, definitely. Restaurants, not that much focus, although we don't have too many restaurants in our hotel. We normally, most of the hotels have a coffee shop, because we are leaving that business to the standalone restaurants to take. But ARS, and I think, overall, to my mind, business environment is going to be very good now. There will be investments coming in, so I don't think we should worry about that small liquidity in the market or so. That these things will happen, some cash crunch, but in spite of the cash crunch, I think I am looking at a very, very positive situation today, actually.
All right, let me get the numbers then from you, Amit. Just a final question. How have things worked out with the subsidiaries? All your managed properties sit under the Royal Orchid Associated Hotel brand. Yes. Things are looking better there, I'd imagine. Any targets you can share with us?
See, I will first tell you the historical numbers. See, our managed that the associated hotel, where we have basketed all the managed hotel there. If you see the revenue, it has grown first from 10.3 crores in 17, it went to 13.3 in 18, now it has touched almost 17 in 19, and it will be touching around 20 in 20, FY20. Now, as far as the cost is concerned, it is not growing. We have been able to keep the cost in control, and any additional hotels that are coming, that we don't have to incur any cost for that. That is why our margins in the associated segment, in that management segment, is growing year on year. And apart from that, some of our subsidiaries have started doing very well. Like our Goa hotel is doing phenomenally well. Then we have a resort Bangalore that also has turned around this year, and it has done phenomenally well. And couple of subsidiaries where we had little drawbacks, that also have now come to a level that in FY20 they will also break even. So with this, the consolidated number is going to grow in a phenomenal way in the years to come.
All right, thanks very much. We leave it at that. A pleasure to have you in here in our studio, and of course share your perspective. 3 new hotels that you have launched, and of course these are in Chennai as well as Kulu Manali and Chandigarh, and these are the newest additions to what has been quite an accelerated pace of expansion that has been for Royal Orchid Hotels. And of course the ARR is expected to maintain at that 10% number for the current financial year as well. That's the management joining in, CK Baji as well as Amit Jaiswal. Well, let's move focus away then from stock specific action.